Hello again, everyone. I hope that you had a wonderful training week thus far, right? In my opinion, you know, as I've stated previously before the actual training week, began. And what I mean by actual training week is Tuesday, the first day of the week, which has high impact USD news events, right? Which was, the low and high of the week for, the respective assets. So, we already went through this, right now, everything that's on the screen, right? And if you guys remember, right, not yesterday, day before yesterday, I told you guys to pay attention to the true week open, right? I remember saying that. And, it served as a, wonderful tool for us to gauge the direction of the week, which price did actually this week. It did exactly what we wanted to see it do, right? And remember that the main focus that we had was on the S&P 500 and the NASDAQ, right? So as you guys probably realize, right? So even if I have, 2 to 3 setups, 2 to 3 ideas, if I expect 2 to 3 things to happen per week, I'm going to give you guys the one that I, expect to happen the most, right? So the highest probability, that's what you guys will get. So here you can see that, and this is no coincidence, right? Here on Tuesday, which is the day before Wednesday, which, has the most news events on that day for the entire week, right? So Monday has the most liquidity, right? The days with the most liquidity do not usually incite manipulation, right? Usually it incites what? Distribution, right? That's the most liquidity that's coming into the market at one time. So it's just, common sense to expect it to distribute, right? And the fact that that day distributes, the day before that should do what? That's right. Manipulate. Thursday, right, which is tomorrow, right, we could expect some form of manipulation like what happened on Tuesday, and then distribution on Friday. Pretty simple, pretty easy to understand. Why? Thursday has less news events than Friday. Okay. So here, right, on the chart, right now you can see the FX chart, right? So we were either, looking for a price to, if price broke above here, we'll just continue, right? But, if it did not, right? More specifically, if it did not, before a major news event is released, then, we would expect it to gravitate to this low, which it did, right? So most of the information which we will discuss today will be pertaining to the, index futures, which is why you see me have 3 tabs open here. So looking at the euro, not much to look at right now in terms of intraday price action. Same for the British pound, right? You can see that since, Monday, we have just been within this small range, right? Same thing here, but it has been worse for the Great British Pound, which, means that the Great British Pound and the S&P 500, the S&P 500 as well, but more particularly here, the British Pound and the Euro is, prone for expansion, right? If you guys realize, and this is, something that we discussed that, we would just touch on a bit, right? Pi. What is pi? How do you, convert pi into time? How do you do that? Right? So just to give you something to think about right now, here, you can see that we have price within Monday's range for the British pound, right? This would be within the pi range, and the pi range has to do with a range of candles, not like a normal range, but in terms of time. So of course you know that the so you know that the formula, everyone knows what pi is, 3.14. So going back approximately 3.14, right, candles, right, you can see that this right here, this candle right here is what? First of all, we have, a cracking correlation, whereas we have this candle trading below this one, within the pi range. Here we have this candle, failing to trade below this one, right? Then here, what else is here within this candle? That's a precision candle. Right here, it's a precision swing point, right, within this range. And remember that we talked about talking about this. So it's not like, there was hindsight. Whereas like just looking, we talked about it and then it just, happened. And this was due to the fact that, on Monday we had this particular closure, right? Here, this candle right here, right? On the opening of this candle, right? There's a gap. Here, there's not a gap, right? Which usually incites, close range price action, which is price action that would remain close to this particular candle's open, right? But sway away from this one due to the fact that it has a gap, right? So we will, that's just something for you guys to think about for now, right? To show you where we're headed. Anyways, here, right, you can see that we had sequential SMT today, right? Whereas we had price trade below this low, which is the previous week's low, right? And then it just expanded, and then it came back down, right? This is just due to the fact that, we're not within symmetrical price action, but yes, you can still, this is still tradable. It's just that it's not, something that you need to hold, right? Here, you can see that we failed to break above this high, right? We just went to this fair value gap and then we stopped. So usually the case is that here, you see this fair value gap right here, right? Once we break below this low, which calls sequential SMT, price returns, right? Where will it return? Back to this fair value gap. Where can we see this fair value gap? Here. Like if we should, look for the same thing here at the same time here, where would it be? It would be here. So we broke below this low, returned within the range. So once we broke below this low, right, and we are way extended over this fair value gap right here, which we consider as a inverse fair value gap right here, right? We're going to look for this one, which will be the base for this sequential SMT, right? This right here, due to the fact that price absorbed the liquidity, which is internal liquidity within this gap, it's going to expand, aggressively, more aggressively than this one right here. As you can see, that price didn't take out this low on this leg of, retracement, but it did take this low out. And here, right, looking at the index futures chart, so this is where we were spot on, right? Literally from top to bottom, mostly the expansion. That's what we got correct. So here, first of all, of course, we were expecting some expansion, some retracement within the range, which first was due to the fact that here, right, we had this swing high right here broken. Here it wasn't broken, but here it was. It wasn't. That was my bad. So here it wasn't broken. Here it was not broken. And here, again, you can see that it was broken. Which is, in fact, a crack in correlation. Right? So that right there was the first, right? Before price even purged this low, before we had sequential SMT below these lows, right? This was the first thing that gave us the idea. So we expected either, right, price to either break above this high, then fall, then, pump above, taking the liquidity above this high, or we expect the price to fall and form a cracking correlation, which should be at least 2 stages, right? So it must be 2 stages. Not just one. If there's not a sequential SMT followed by a precision swing point, it should be something else. It should be either an SMT fill or the thing that you will be introduced to right now, or expanded on, because we talked about something similar to this already. So this was the previous week's low, right? You can see that here, right? This wick did not go below this one. Here we did trade below this one. So what makes this important already, even though we haven't looked at the next slide, is the fact that this sweep of liquidity right here, we had this sweep of liquidity here above this low. Then we have this sweep of liquidity where below this low. So yes, we had sequential SMT here again, just in case you didn't get that. So all of this right here, this change in the state of delivery, whereas we have price trade below this low, it was above this low. Here, it was below this low, which incited, expansion. And when did it happen? Here, on Tuesday, right? So here, below the true week open, I don't have to, draw the true week open out in time for you to know that it is a true week open, right? You just know that it is because you've been here, right? And here is when things get a little bit more interesting. So here, right, we already talked about, here already, right? This zero liquidity and this one. Here, looking at the 1 hour time frame, right, you can see that we had sequential SMT, right? And this is the exact, right, the same levels that we drew, right? We drew these levels here, and, we expected this to happen, right? We expected price to drop, and we expected it to rally. And we expected that rally to be caused by what? A cracking correlation, which is what happened here, as usual. So here, first thing first, right? Before we dropped here, right? You can see that price traded above this high, here traded above this high, filled this gap, right? Traded, and filling the gap means that you have price trading at least 50% of the range of the gap, right? So we filled this gap, dropped. Did we fill this one? No. But we failed to do so. We failed to do so, right? So this gap right here was not returned to, filled until this candle, right? This candle right here. So again, price traded here, dropped, took out this low, sequential SFT happened here, and all of this right here, you see 1, 2, 3, it must occur within a quarter. It does not have a specific quarter that it must be aligned to, right? Or we're not ready to talk about that yet, but it does not need to be aligned with a specific quarter, right? And nothing is random, so you won't see this unless it's the time for it to happen, until the time is perfect, right? So 1, 2, 3, a low, this high right here fills this gap. This one does not fill this gap. That's a correct correlation, but it's not, something that, well, you can look to short something like this if you go to the lower time frame, but it's better to use this, to expect another correlation, which, is the SMT market structure shift. So here, price dropped. The S&P 500 took this low out, expanded. On the closure of this candle, what happened? Price closed above this low. Here, what happened? It closed above this low. Okay, that's a correlation there. Is it sequential? No. But it happened after this, whereas we have price, wick, fill this gap right here, right, which is the same gap here, right? So these run on the same price engine, right? The only time that they're out of line is when reversal should and will occur. That's all that happens, right? Here we have, let's start right here. Here we have price trading above this gap, then closed, right? So this fair value gap closed above this one. That is a change in the state of delivery. So this is the same thing as if, what you would expect to happen if price just drops and fill a fair value gap, right? This is the same thing, right? So you wouldn't expect price to go below this low right here, which is the low which caused this, or the low of the candle which caused this correlation, right? So here, what happened? Correlation, price close, expanded higher, SMT market structure shift. And pay attention to this, the SMT market structure shift, what happens? It's the one that fills the gap, which incites higher prices afterwards. Here, what happened? This fair value gap formed within this one, right? While this one formed outside of this one. So the only time when you would consider this as, what you previously knew as a balanced price range is when you have this one, closing within this one, and then you have this one as well closing within this one. No, it's not a balanced price range, which is why you don't have price return to it, right? Price just continue to expand. Anyone that placed their limit order here, they're pissed, right? Then afterwards, you have the SMT market structure shift. Here, price failed to break above this high. Here, it broke above this high, pierced this fair value gap, which was already pierced here. Then it just continued to expand. Also, what happened? What else is here? This closure is above this one. This one is below this one. What is that? Hidden SMT market structure shift before the actual SMT market structure shift, which was in fact sequential. So this high was from when? Q4 of the previous day. This one was from during Asian session of Tuesday. So what I need you guys to do is, study these things and pay attention to the first things that I said in the first few minutes, right? We've gotten to a point where, as I've seen that, we have a lot of hours of videos, right? So, people are complaining. Some people are actually complaining that, I have, to be watching too much things, which, I never thought that I'd be at, this level, whereas I'm giving too much information. But it's a lot of information. You have a lot of you guys that sent me your certificate that you passed this or that, your trading history, this or that. And it's very good seeing some of you guys. Like, it's actually insane. The chat itself is worth a lot, right? You guys just, communicating with one another, sharing ideas. And then it's like, I see you guys just sharing setups. And then the next morning pans out day after day after day after day. And, that's just actually insane, right? To have, such skilled individuals within, one community. So, yeah, we will continue this, see if we can get everyone better, see if, we can, improve in anything that we lack. And I hope that you found this useful. And we will be back Sunday. There's a lot of things to digest. Try to not stretch too much. It's the last day of the month, right? It's NFP week. It's Wednesday, right? We shouldn't be stressing too much. Here we had the thing that we were looking for pans out, right? That's good. You caught it. Good. You didn't. It's fine. Patience. It won't kill you. It will, in fact, make you a, better analyst / trader. And I hope that you have, a, wonderful week. I hope that you don't overtrade for those that are going to. But you'll be back better next week. With that being said, good luck and good trading.